All right. Good morning, everyone. Welcome to the panel Investing in AI Native Startups. Before we begin, I would like to acknowledge the traditional owner of the land. I pay my respect to the elders, past and present. For those of you joining me today, it's a beautiful day. My name is Michelle. I am the investment manager at Launchwick. If you haven't heard of Launchwick before, we are a Victorian startup agency. Our job is to really look after the entire ecosystem that consists of founders, investors, and ecosystem players. Our job is to really uplift, give the skills and confidence for everyone to start a startup, work in the startup, or invest in startup. Joining me today, we have Sally Yu, investment principal at King River Capital. Welcome, Sally.
Hi, thanks so much, Michelle, for the intro.
Would you like to say hello to the people on the call today?
Yeah, thanks so much, everyone. Really keen to talk more about AI. At King River Capital, we're a Series A and B focused VC fund based out of Australia and the US, and we're the only firm with boots on the ground in the US and Australia. So I actually just came back from a trip to San Francisco. I just spent a month there sourcing AI opportunities. So really keen to talk all about it. As Michelle mentioned, I'm a principal in the team and I lead our AI investments.
Thank you, Sally. We also have Dror Ben Naim joining us today. Dror is the chief AI strategist at Empress Capital. Welcome, Dror.
Hi, Michelle. Hi, Sally. Nice to be here. Thank you. Briefly introduce myself. I did computer science and physics in my uni. I did then a PhD in AI, and I worked on a platform to personalized learning, which I then spun out of the University of New South Wales here in Sydney and became the founder and CEO of that and went through the entire founder journey, raised money, moved to Silicon Valley, grew the team. And eventually we had a good exit to Pearson, which bought our company. And they say that you either live long enough to, you either die a founder or you live long enough to be a VC, to become a VC. So I'm now a VC at Empress Capital, and I am the partner in charge of the AI opportunities. Much like Sally, I look at AI pipeline, AI startups. We invest early stage. We're pre-seed to Series A. We like to be the first checks. We often lead. So that's kind of a little bit about me and my role and my background.
Thank you, Joe. So a bit background on this one. I have been looking at AI investment for quite some time as well, and I just feel really overwhelmed. And I was thinking, surely there's other experts that I can tap in. I look at King River, they invested in Relevance AI. I look at Empress Capital, they invested in Anthropic. So surely I can pick their brain and ask them to share that is secret with us. So a little bit of housekeeping. Today's format, I will start with a little mini game. Then we'll go into deep dive questions, and I will keep about 15 minutes towards the end for the audience questions. So if you have any questions, feel free to pop in the chat. We do have Bronwyn from our team working behind the scene to keep track of all the questions. So feel free to pop in questions along the way or wait towards the end. Let's get started. Ready? All right, the first part, I would like to start with a mini game. Lightning round question of, would you investing in this startup? I have 10 startup here. Please give me an answer, yes or no, with no or minimal explanation. The idea is I just want to have a temp check of where you're at with the AI investment. Ready? First one, a new LLM model competing with OpenAI. Sally?
Mostly pass unless it's a really exceptional team.
Andrew?
Yeah, exactly. So, competing with someone who already raised, I don't know, tens of billions of dollars, it has to be a very special case.
And by the way, audience from the call, if you want to give me a thumbs up, thumbs down, or any emoji that works for you, feel free to drop in as well. All right, the second one, AI personal tutor, interactive tutoring system that personalized to each learner.
Well, you're describing my previous company, Smart Sparrow, so of course I will invest in this opportunity, subject to due diligence and understanding how they're going to market and so forth. But yeah, absolutely yes.
Right.
Personally, for me, generally pass unless they have a really good distribution strategy.
You're giving away secrets now. All right. Third one, AI personal finance. So personal either a financial advisor, tax advisor, but for individual.
Who goes first? I go first.
Yeah.
Yeah, that's an area of focus for us. We will definitely look at this opportunity. So broadly speaking, would we consider investing in this? Yes, of course, subject to due diligence and so forth. But on the category level, yes.
Yes, perfect.
I like fintech AI, but generally pass if it's D2C.
Ooh, Sally is really hard to impress. All right, number 4, AI editing tool. So automate tasks like background removal, captioning, dubbing, etc.
Okay. I'm not sure about this category. It feels like something that established players can kind of add as feature to their platform. So I will take a meeting and I will have a look and have a little bit of a deep dive. But broadly speaking, I feel skeptical about the particular category.
I feel the same. So generally pass because it's a bit saturated and there are really, really good players already. But again, anytime there's an exceptional team, it'll be a yes for me. Like, I'm generally pass on all, but when there's a great team, I'll invest.
You start with a no, and then we'll see. Yeah, I think that's true for many VCs.
It's okay. This is a temp check of how you're feeling, how your gut is feeling. It's not about the due diligence. Okay, number 5, we add AI cybersecurity. Predict and counter react cyber threat to business before it happens.
So I'm going to assume, just actually for the sake of this discussion, I assume we're talking about early stage Australian startups coming to us, and that's their category.
Yes.
Okay. So broadly speaking, I would probably take a meeting with everyone. Just want to say, everyone, to the audience, we are very open to conversation. Now, in terms of my feeling about that particular segment, I would say, look, we did make an invest. Did we finish? We kind of. Maybe I shouldn't continue that sentence. So we're looking at this category. We're interested to understand more. I'm a bit skeptical about it because cyber is not a strong kind of ecosystem here in Australia. But as I said, it's all subject to due diligence. So we would be interested to understand more.
Very cool. Do you share the same thing, Sally?
Typically, yes for me, just because I'm interested in the space, but agreed with what Dror said.
Okay, Sally, you go next because now you get to
yeah,
say.
So we get to see, if Sally said no, Drew will say yes, and vice versa.
Yeah, make it interesting.
All right, number 6, AI recruiter. So AI agentic would screen resume and interview candidate before they send the recommendation to you.
So generally pass only because there are already some exceptional players, especially in the US. There's a player called Paraform. There's things like Mercor. So generally pass.
I wouldn't. I don't have strong feelings about that. I don't know enough about that to make a strong statement, like maybe Sally knows. But I would say that the fact that there is a big player in America doesn't necessarily deter us from investing. So also I want to say, Sally, you're looking at Series A and B. We're looking at Series pre-seed, seed. So it's a very different type of investment thinking. We're a bit more open, more bold, I guess, more spreading it a bit. I will take a meeting. I will try to understand what the opportunity they're seeing and how they can win against those companies. So it wouldn't be a no, but it would be a skeptical about the space.
Okay, we're gonna finish it lightning fast for the last 4. Just keep it to yes or no.
Okay.
I'm gonna hold you to accountable to them. Number 7, AI e-commerce that detects and prevent post-purchase e-commerce logistic issues.
Yes.
Yes.
Cool. AI accountant does accounting for you, tax filing for you for small, medium business.
Yes.
Absolutely, yes.
Amazing. All right, AI for farming, data analytic platform to manage crop and predict yields.
Yes.
Yes, but unsure.
Maybe. Okay.
Number
10. Yeah, number 10, last one. AI that sales lead generator. So cold calling, that sort of thing.
No. Too saturated.
Yeah, I feel it's saturated. It has to be super amazing new thing, and it feels quite saturated.
Yeah, well, I totally agree on that. Okay, let's do a deep dive question because I have a bunch of, as you know, I have so many questions I want to ask you, pick your brain. But before we're doing that, let's take a step back. There's so many terms getting thrown around: AI native, AI first, AI wrapper, AI enabled, AI powered. What do they even mean from your perspective?
Who should this?
Maybe do you start with, because you look in earlier stage for us.
Okay, me as well. So AI Native is a company that was born to solve a problem in the age of AI. So Canva is not AI native. They can add AI features and they will be then AI enabled and powered. Xero is clearly not AI native, but a company that says, oh, look, this is Xero, this is B2B SaaS, we can do that problem. We can solve it completely different approach just with AI, new stack, new way of thinking about the UX, new problem that the customer maybe have now in this age. We will consider that AI native and very excited, interested in about that. In terms of enabled and powered, is kind of the same. Every tech that has some AI in it can claim that it's AI powered and enabled, and I'm okay with that. And a wrapper, it's a bit of a derogatory phrase these days. It's like it's a very thin layer. It's just a tiny bit of UX on top of a model. You don't really see, like, you see a lot of wrappers, I guess, out there. We don't, like, we would, if we were to ever use that phrase, it would be in the negative context of like, listen, it's just a wrapper. But
Right.
frankly, as a founder entrepreneur myself, there can be a lot of moat and tech and differentiation in your UX UI. So I'm not personally discounting people who are like, other would maybe thinking of them as AI wrappers.
Yeah. Do you have anything to add, Sally, or are you happy?
Yeah, I think that's a really great definition. But for me, I guess, for just focusing on AI native, I'd say typically something else to add is like these companies are only a few years old. And it's not, it's just because, ChatGPT, which was the biggest enabler for a lot of these AI native companies, has only been around for a few years. And I think their focus is, you can think about it as like an end-to-end autopilot experience where the AI does all the tasks for you. Whereas AI enabled, usually I see it as more of a co-pilot experience. Like Canva has amazing, AI features. That's where it's more AI enabled or powered, versus like a Gamma, which is like a completely AI native graphics or design tool.
Yeah, I agree with that.
Yeah, love that example. So when we look at the market from very overall perspective, and I would love to have your intake here, Sally. Where are we at? So how are we comparing with the rest of the world? Do we have any edge in terms of competing on the global scale when it comes to AI investment?
Yeah, so I think on the audience here we have operators and angel investors and other people as well. So I'm sure you're all aware that AI is extremely hot right now. So I think in the newest data from Q2 2025, $40 billion US, or 50% roughly of global VC funding went to AI startups. So it's really, really it's hot right now. But on the demand side, I'd really say it's driven by enterprise and consumer spending. So there is money and data to back this up. So I don't think it's too much hype. Obviously, there's some crazy rounds. You hear about people getting $100 million offers to join Meta and all that. So there's some aspects where it's a bit hypey, but overall, where we are in the AI VC or investment ecosystem, so it's a very exciting time because we're starting to prove ROI. On the point about Australia, I'd say in the US, they've got a lot more opportunities across the entire stack. So if I talk about the modern AI stack, we start from the bottom. That's more physical infra and compute. So you can think about companies, NVIDIA. If you go a step above, it's the foundation models. So you all know, Grok, OpenAI, Gemini, etc. And then I'd say probably the next layer is the data layer. So data is all about, the quality of the data that you receive is, what goes in the models and what comes out. And so that's really important. Then there's really AI, ML orchestration and tooling, and then applications. So I'd say in America, it's all across the stack. There's lots of innovation. Here in Australia, we're probably better at the application layer, just given our historical success. Like we've got amazing companies here, 25 plus unicorns, I believe. And according to data I've seen, we're actually the most efficient in terms of VC dollar versus like unicorn created globally. I think entrepreneurs here and founders here, extremely scrappy. They go global from day one. So, these really successful unicorns are starting to spin out talent. That means that we're really good at application layer and like vertical AI specifically. Another thing I'd add is that we have really good technical universities. So I took a quick look at QS, which many of you might know is like the university list. And 7 of our Australian unis are in the top 100 list for AI universities. So I think we've got the engineers and the research talent that's starting to bubble up. And the last thing is just R&D tax credit is great. Like I think we should really take advantage of that. I'm on the board, for example, of Relevance AI with Insight Partners, Bessemer Venture Partners, 2 of the best VCs in the world, and they were shocked. They like, wait, so for the R&D we get 30-40% of the dollar back, and they were just blown away. So it's definitely something we should, thanks to the government for that, and it's a great place to live. So Australia has really I think it's bright future ahead of it, but I'd love to see them expand beyond the application layer, specifically in AI and machine learning orchestration and tooling. So just, powering these AI companies, and also on the data layer, I think we can do a lot. Then obviously there's infrastructure, etc. But I'd love to see that more.
What do you think, Dror? What do you see?
I agree with everything, so it's going to be boring. I will make one point. Let me take 2 points. So I did see the same research that basically tells you that Australia is the most efficient in number of dollars invested per unicorn. And I thought about it for a second. I said, I don't know what it means. So there's this X amount of money going into the investments, and then the number of unicorns that's coming is the best. One way to interpret it is that we're really good at making unicorns, but I think another way to interpret it, and I just leave it for you to think about it. I think another way to think about it is that everybody invested in Canva and Atlassian. It's like everybody invested in the unicorns, meaning that actually it's a risk aversion signal. Food for thought. But I think it relates to what Sally mentioned, which is my way to think about it is Australia is a little bit more risk averse than America. Australia, historically, most of venture returns went in the B2B SaaS business model. In America, you've got in Empress Capital, we see the world through this infrastructure, tools, and apps. AI infrastructure barely exists in Australia. AI tools, small AI apps is the opportunity we conceive, because exactly there is already an existing ecosystem in the B2B SaaS, people with that expertise, and we think that all the winners and unicorns of B2B SaaS are the target to be disrupted by the AI native new cohorts that we're going to invest in. So we literally made a list of all the great B2B SaaS companies, and we sat on each one and actually brainstorm. What does it take to disrupt them? Will they be building it themselves, or will they be buying? That is the type of opportunity we as VCs think about. And I think I think we're not the only one, of course. And the competitive edge, in my opinion, is exactly in that application layer, in the B2B SaaS, in disrupting the B2B SaaS kind of model.
Very smart. Actually, can I tack on that? Could you actually go another layer deeper? So you mentioned about your very much top approach of this, what it takes to disrupt them. So what else do you do as a VC building investment thesis? What are your secret sauce? Tell us.
The secret sauce?
Yes.
We are awesome guys. We're really smart, and we are great to work with.
Yes.
And we are all ex-founders, so we really understand. We raise money ourselves. We manage board. In terms of the thesis, there's a lot to it. I'll give you a few points. First of all, I'd say the thesis is a living, breathing thing. It's not like my PhD thesis here in a book, old. So it's a living, breathing. We consume news, insanely amount of them. Read as much as we can, and then look at who else is investing. But a way to think about it is that it's it can be very overwhelming and complicated. A thesis is supposed to help you make sense of the world. For example, Sally said we wouldn't invest in that because that's B2 direct to consumer or something. You said something about some category, and that's great. That means your thesis is that's maybe high friction, low success rate. You're going to pass on that. You're going to focus your energy on something else. So theses in the VC world, their function is to help us build business mental models in order to improve and I guess speed our decision making. So I'll give you 2 anchors from our 7-pillar thesis. First of all, why is it that everybody's going all in on AI? What is it that they're seeing? Are they just greedy? Yes, of course they're all greedy. But the thing they're seeing is what we, of course, a platform shift. What's a platform shift? A platform is the thing on which the application runs on. It used to be mainframe. We moved to PCs, personal computers, desktops. Then we moved to the cloud, browsers, and then we moved to mobile. Every time we move a platform, the apps needs to be rewritten, and then new opportunities were open. Typically, the market grew. Everybody's talking about now the AI platform shift, meaning that is it's not like the thing runs on AI in the same way it runs on my mobile, but it kind of is. So it's a confusing phase, but it is. We believe we call it a platform shift, and we have this thought that all applications will be rewritten. So Canva will be rewritten. Sure, maybe they will IPO before and make a killing, but in terms of Adobe was bigger than Canva. It was, and Adobe is kind of phasing out. At least I believe.
Fine.
Canva is going to be overriding. Employment Hero and all the beautiful, great, successful companies, we believe will be either they rewrite themselves or someone will come and they will either buy them or compete with them. We'll see. It's going to be interesting. So pillar number 1, I would say platform shift. Pillar number 2, I like to think of the AI getting into the dock. Let me tell you what I mean by that. Most of software, if you look at it from outside, you still have docs, and that's like the product disclosure, the term sheet, the PowerPoint, the presentation, the spreadsheet, Office, Microsoft Office, the stuff you create, and then you've got software to manage the workflow, copy, share, get signatures on the doc, get people commenting on the doc, back up the doc, whatever. But to a large extent, up until 2022. If you look into an office, you see people typing. What are they doing? They either talk to each other or they're creating some sort of doc. We think it's the first time in history that AI, new technology, allows us to start creating that doc. So creating the legal document, creating the term sheet, creating the analysis itself. And that is create a whole new surface area for new investments, for new ideas, for new startups. So not only B2B SaaS is being disrupted, but now we are getting into the dock. So we can think of so many more types of companies, and we invest in them. One great example for us is Meritech, and they're like a legal document company, and they create legal documents for, instead of a lawyer, paralegal team working a month, they can do it in 15 minutes. And that's mind-blowing, and they're getting adoption through the roof because of that. So 2 things, platform shift into the dock. Over to you, Sally.
Yeah, that's really interesting. I guess one thing I'd add, just especially I think Michelle mentioned there might be some people who are angel investors or considering investing in companies themselves. I'd say a way to form your thesis, firstly, I'd say it's deep research of understanding of a space. So really thinking forward 5 years, let's assume, AI models get to that space of closer to AGI or can do most tasks. What are the things that are, take a lot of effort but are really high value? What would those be? And thinking about those areas, and also just talking to really strong operators in that space. For example, Dror mentioned legal. So if you're really interested in legal tech AI, you should talk to the best lawyers And are they using Harvey AI? Are they using Meritech? What biggest problems are they trying to solve in their jobs? Because I think where AI is going, especially agentic automation, is really about augmenting the role we do and automating a lot of that work. I don't think, let's not go into the debate of whether the taking of jobs and all of that, but one thing they can do is really help people, to do their jobs better. So thinking about where the biggest bottlenecks are. So talking to operators and founders in that space. And then I'd say the other thing you can really do is test AI products and tools yourself. Like if you're an expert in a space, try all those things and see where it's failing right now. For example, maybe you're a designer, or a UX designer, and you've used a bunch of different AI tools. Like imagine that the AI models are really good. Where would that go? And that's how we form a lot of our investment thesis. And it's also just spending a lot of time talking to researchers as well. I think that's an area because they're at the frontier. They're the ones creating these models, creating the new companies, and seeing where they're excited.
Yeah, all right. I love this. Can I be jumpy a little bit? Because we mentioned a few examples here. So how do you think about defensibility? So how do you know, for example, Meritech would compete and take over Harvey? And if yes, then how do you feel confident that no one else is going to be, jumping out of the wood and wiping out Meritech very quickly? Because we all know that the speed in AI is insane right now.
Yes. So the answer is that we don't. And if we did, it wouldn't be called venture capital. It would be called banking. We take a risk and we build a portfolio and we model these risks like nerds on spreadsheets in order to come up to an optimal, risk-adjusted return, as they say. So, but I will give you my thoughts on that question. When I was raising my Series B, I called my father. I said, "Hey, good news! We raised $10 million, whatever." My father was, aging, doesn't know anything about computers really, and he said, "But isn't Microsoft better? Like, they do software, right? So can't they just do what you do and win?" And it's so far off, but it's also such a good question. So. Yes, Microsoft can do what I do if they want to, but if you ever worked in a big company, you actually know they're busy 100% doing what they're doing, and they have their own competition. So the world is not so simple. So first of all, I don't think Mary and Harvey are competing. And if you do, you just didn't you have to go one level down. Mary is doing one part of legal, very good point solution. You can say it's a feature, and us, by the way, I mentioned we have 7 pillars. One pillars of our thesis, contrarian thesis, is give me a feature. Early on, I don't want to see a platform. I want to see a feature. Good luck building a platform from, it's hard. It takes a lot of money and it's hard to start in Australia. And I believe in platforms. But when you start with a feature, I'm joking, don't call it a feature. It's a point problem and a point solution that actually can drive the sales fast. And then you get into the flywheel, in revenue flywheel. So 2 ways of thinking about it. First of all, really dig down into who's really competing with who. And I think there's a better chance Harvey will buy Mary than try to implement what Mary are doing. All right. Point number 1. Point number 2 is that it's not so simple. And okay, so when we do look at that, we make a calculation. When we look for defensibility, the best way to look at defensibility is to talk to the customers and to try to analyze, research the competitors, and try to make an educated guess. And it is a guess. And if everyone is telling you it's not a guess, they're bullshitting you. And I will tell you this, in software specifically, you can run, but you can't hide. So we are investing in very fast runners. If you think that you can secure your software startup via patents and copyrights and whatnot, good luck. I want to talk to you. I want to understand what you're talking about. But in 99% of the chance of my personal experience, having actually submitted patents, software patents, writing a PhD about it, and so forth, it's bullshit. The thing that matters is speed of execution, much more. And that's kind of how we biasing that's our bias in decision making.
I love that. You can run, but you can't hide. Do you have anything else to add, Sally?
On the defensibility point, I couldn't agree more with Dror right now in terms of it's all about execution and speed. It's just, a lot of you would be familiar with the tools like Cursor out there, which is a coding agent, and we've invested in ourselves in a company called Replit that also does that as well. So people can get to prototype, get to production much quicker than ever. So, I think so much of investing has gone back to the quality of the team, just given it's about execution and speed. And, just in general, like things that could be potential moats, like there's data, like do you have any really proprietary data? is your model or like agent system architected in a very specific way that's actually very hard for someone to replicate? Like, are you using open models versus closed models? There's a lot of different things that could make your architecture a bit different. And then it's really on distribution as well. So I'm sure all of you are getting flooded by AI emails pitching you to use this tool, getting you to do that. Like, how do you actually break above and have that unique distribution? And then also, it's all about product. Like, people are willing to experiment these days. I'm sure all of you have tried many different note takers, tried many different AI tools, but the number one thing that gets people to stick and have high retention of your product is if your product is the best in the market and actually works. So it's still about working product, having a great team, moving quickly, and then there's also the architecture and all that. But I know that's very hard to keep a sustainable moat in, just given how quickly things are moving. But again, that's on your team knowing what to use and when to innovate.
Yeah. All right. I want to ask a little bit more on that, Sally, given that you mentioned a few times on the team. So I imagine by the team, you mean, you expect there's some sort of technical human resource in the team. And are we talking about just, some expert that can code, expert that have worked in AI before? Or are we talking about the data modes? We're talking about the architect of the actual platform? What do you mean by that?
Yeah, that's a good point. I mean, I'd say it really depends on the type of company you're building. Sometimes if it's a very AI native company, then yes, usually it's really helpful if you have someone that really understands AI and machine learning systems. So maybe they have a PhD in AI from a big US or Australian university. Like, that's really helpful. But if you're not if it's more a vertical play where it's more about domain expertise, you probably need someone that's really deep and a very up and coming or strong technical person that can learn quickly. So it depends what type of company you're building.
Okay, so it's not like if you don't have any machine learning expert, then you don't get funding, that sort of thing.
That's not true. It just depends, where you're playing. If you're on like that data layer or like that foundation model layer or at the AI ML orchestration, that's where I really want to see that. But if you're just at the application layer and you can learn quickly and prove that you can execute, don't need that.
Yeah. Do you have anything to add, Dror?
My thoughts about it is like, I'm looking for fit for purpose. And if you're trying to build a company that sells some super advanced technology to very sophisticated customers, then I want to know that your team can execute on that. Whereas if you're on the other side, you're trying to, the degree of sophistication and complexity of your product is lesser. And maybe your channel to the market is more crowded and it's more about your go-to-market than it is about the feature set or the relationship you've got with the enterprise buyer. Then it's a completely different story, right? Again, let me give you an example. So if you're trying to disrupt Xero because you think Xero is a crazy old tool, 5,000 functions that I can click through interfaces and it's like 20 years and you're coming at Xero, then I don't think you need a PhD in AI. Okay. Whereas if you're really trying to come up with a new way to create synthetic data in order for big model to train their ChatGPT 10, then I hope you know what you're talking about, because you need to be quite sophisticated.
I see. Can you educate me on business model? So if you see an AI startup, what do you think the most attractive model or most promising models that could work? Would that be SaaS or charge per user, or what kind of thing do you see?
I'll go first. So everybody loves SaaS because the market gives you 7x on SaaS revenue, because that's it. It's been established. It's like a law of nature. It's like you've got Newton gravity. That's law of nature, and you've got 7x on B2B on SaaS. So everybody can talk about it. It's easy to understand and so forth. It wasn't always like that. Microsoft IPO, there was no SaaS. Apple IPO, there was no SaaS, right? They're making pretty good companies, aren't they? So SaaS, I think, is kind of slightly phasing out. Why? Because what we see, and that's a thesis of mine, and I could be wrong about it. Let me just share with you how I think about it. So the concept of SaaS is that, listen, everyone in the organization gets a seat for my whatever platform, and I'm charging $15 per user, and everybody's happy. The underlying assumption is that my cost of adding new users is extremely low. Like
Yes.
if I need the thing that cost me to run to sell to it's Smartcard, my company, if we had 100 users in an account versus we had one user account, our cost was almost the same. So it's pure benefit, and that's why investors loves it so much.
Yeah.
Whereas in AI, I've got cost per compute, cost per intelligence. My intelligence has cost per intelligence. Suddenly, I need to charge you, like my 100 users is not 100 times more, it's 100 times more expensive than one user. So the margins are collapsing. So it doesn't make sense to charge me just a flat SaaS and count it, because the margins are not there. And very soon the market will realize that when they assess when they're trying to give you a valuation. So we've seen people who are doing SaaS plus, so it's SaaS plus per use, and I think that's actually the intelligent way to solve it. I've seen more complicated way when people are trying to say, well, that agent I'm just built is saving you 100,000 a year, so I'm charging you 10,000 a year. The problem I have with that is that humans can't monetize savings. Because once I did it 1 year and you come to me in the next year and says, oh, that thing I just have saves you 100,000, that's no longer true. So I've got a big question mark about that model. I've seen it, I'm tracking it. I don't have huge faith in it yet. I do believe more in the SaaS baseline plus per use.
And what do you see, Sally?
Yeah, it's a good insight for sure. I'd say the most typical, to Dror's point, is like SaaS mixed with usage based. And I think it's because most of these companies are using some sort of foundation model. They're mostly outsourced, like not that many companies build their own models. And even if they do, that's like a cost that every time they run an agent or every time they do an API call to that model, there's a cost associated. So it's very hard to just do a flat SaaS or seat fee sometimes, because then 1 month there might be extreme usage and it's a bit wavy. So I do see that in terms of SaaS, but it's capped at some sort of usage. For example, I'll use examples of Cursor and Replit. The base fee you can pay is $25 a month, but you can only create certain amount. They give you $25 of credit, and if you exceed that, you move to the next tier. And to Dror's point, I think outcome based is where we're heading, especially for agentic companies, because they're now doing, I guess, tasks that can be comped to FTEs. So I agree, cost and time saved is very hard to argue, but if you're more on the revenue generating side, so like number of leads or number of pipeline created, I can see that some companies are moving that way, and we'll see how it goes, but I'm seeing it more and more.
Can I circle back and double click on the thing that you mentioned on the unit economics? Because you mentioned that with SaaS, you build once and the investor sort of subsidize that cost. The curve that we all talk about, the big cost at first, and then hopefully that would get you to scaling, get more user, and the margin is there towards the profitability. What does it mean for investor then? If the AI company, as you scale, the cost per service actually doesn't go down, it goes up because you have more intelligence that cost you, the GPUs, any new query equals money. What is the investor role? Do we just keep subsidizing in each stage, and hopefully, the next investor would buy out a role? Or what do you think our investor here? Or we don't even actually need investor anymore now that the company can get to the revenue earlier? So there's totally different thought or arguments. What do you think? Do you want to kick us off, Sally?
Sure. I mean, it's a fair question right now. I think in general, I'd say right now that AI native companies typically have lower margins right now at the very early stage versus what I've seen in SaaS. Like SaaS, best in class, like a benchmark lot of VCs uses 80% plus is good for SaaS companies. I'd say a lot of AI native companies are lower in the early years just because of, as you said, compute costs, GCP, AWS costs. But in the long term, I don't fully agree with that in the sense that the margins will be low forever. I think I mentioned earlier in another question, like there's so much enterprise adoption and enterprise demand that, subsidizing quote unquote now to win the market share of really sticky, really strong enterprise use cases, I believe will really pay off in the future. And I still think, we've talked about AI for a few years now, but we still are in the early innings. There's so much more that can be done and will be done. So I don't think that I really fully, I guess, agree with that sentiment. And I do think there will be, hopefully, and that's how the technology is going in terms of decreases in compute costs, more efficient models, like maybe you use open source instead of closed source. Like there's ways to bring that down over time. And I just don't think, those lower margins will last forever, but let's see.
Interesting. And Dror, what do you think?
My 2 cents here is that investors are, yes, subsidizing the early stage of a company in order to reap rewards. That's the dynamics that has always been since the day, financing was invented. So I don't think anything changed. I do agree with everything Sally said. Especially, I like to see trends and convergence. So I see a trend in cost of. If you see the trend of cost of token per token or per million token or whatever it's going down. The infrastructure build that's going on in America right now, that's going to keep not only America, throughout the world, but they talk a lot about it in America. So that's going to keep going. So there's going to have much more infrastructure, much more energy, much more tokens per second in the world. So where is that heading? Is that heading towards cost climbing or cost crushing? I think crushing. Over time, the models get smarter, keeps getting smarter. So I like the quote: over time, intelligence and energy are trending to zero. So that's kind of they call the age of abundance. So so at the high level, I'm very optimistic about that. There's some existential things you can talk about, and it's an interesting philosophical conversation, and it's interesting. I don't think it's a bit off topic for now. So most of the time, and for all intents and purposes, I'm very bullish and optimistic. And yes, you couldn't be like, we just getting started couldn't be true. Like there's the gap in diffusion between the hype and enterprise adoption is so great. Just walk into any company that someone and just look at what they're using. Ask simple question: what version of Office are you using? How many of you guys actually using agents here? Did you change any workflow? And you will because you can do agents now or whatever. You will see that the human factor is the thing that is now the speed of human adoption is the bottleneck here, which is therefore gives you a good sense of the size of the opportunity.
Interesting. Can I ask you the last question on that before we throw it into the audience question? So you mentioned the speed of adoption. So in the past, we sort of have I wouldn't call it playbook, but a benchmark of what momentum you would expect, right? Do you have something similar for AI? Let's say how fast you would expect the company, how quick of adoption? Do you have a number like in the first 5 weeks you have to have 100 leads or 100 sign up, etc.? Do you have something like that, John?
I wish I did, but I don't. I also think it's very different for very different companies. So what we try to do is we try to meet a company, and if we like the team and if we like the problem they're solving, and we have some conviction around that being a success, then we'll go the next meeting. We'll try to understand. Okay, how would we track progress here? And then even when we invest and even when we sit on a board, we would then formalize those into KPIs and reporting, reports, etc. So we're not screening at the level of, but also again, we're series. We meet people that sometimes don't have a product, or sometimes literally just finish the first version of the product, and everybody knows it's shitty, but they need some money and maybe they make it better. So it's not like if I was a Series A or Series B investors, then I have I think, Sally, I think you've got a way better answer to this question than I do.
Yeah, I think, at the pre-seed and seed stage, as you said, it's challenging because often they're pre-product or pre-revenue. So it's more, again, it's back to the team. But I do focus on Series A and B at King River. So, the benchmark has moved. I think there's AI native companies and then there's other companies. In terms of AI native companies, I'd say there is in Silicon Valley, in SF, it's also very removed world from rest of world. So in rest of world, usually at Series A and B, you'd be talking like 1 mil plus ARR, strong margins, and in more typical space. In SF, it's a little bit crazy right now. So, at Series A, sometimes you see companies at 10 mil, 20 mil ARR already. And I'm not saying everyone needs to reach that benchmark, but if you're talking about the best in class, there's a report from Bessemer that you can all check out afterwards as well, where it's now, they like to say the new AI, I think it's called Superstar, is they're doing quadruple, triple. So your revenue ARR growth is that first few years of your life, and you get to I think 100 mil ARR in like 3-4 years or something like that. I'm not saying that's a benchmark, but in Silicon Valley, where it's a very removed world and in AI only, that's what so-called best in class is. But I think people just really should focus on making a really good product and getting to that first million in ARR that's sustainable and is growing. And I think that's at a stage where you can talk to Series A and B investors. Like, different investors will have different benchmarks of what they think is amazing. That's when you've got a repeatable sales engine, your product really works, and you can try raise Series A and B capital.
That's insane expectation. Okay, I would like to ask few audience questions. We have a few that mention the ethics and copyright here. Richard asked, can we please discuss copyright and training of models under Australian law or Australian-based data? Does this just constrain the ability for AI to develop products for the industry to grow in Australia? Do you want to?
I don't think it does. Personally, I haven't encountered real problem. Maybe some news and maybe some product that was trying to summarize news from Rupert Murdoch's empire got into trouble about that. So I didn't encounter that issue in my career so far, unless sometimes I like to read about it in the news. So I'm happy to have a discussion about it, but I'm not particularly informed about the problem here. So.
In neither, I haven't really seen issues under there. I think it's just because regulation is so early, and especially in Australia, I'd say I feel like we're a little bit probably behind in terms of what we can and can't do. That it's very hard to comment right now.
We did a podcast about it me and my partners. We argue a lot, so we decided to make a podcast out of that. So in one of our arguments, there was the news that models will, I think New York Times sue OpenAI or something, and they already settled, and like it's peanuts for OpenAI to settle that. And then the argument here is that you're not a model that, technically speaking, is learning from an article, is not regurgitating the article. So it's not actually copyright infringement. You don't have a law that says I'm not allowed to learn from reading your material. I'm reading their material and learn from it, and here I am talking about it. So what, I'm going to be sued because part of my sentences are from the article? So this is a gray area, and to a large extent, I feel it's a distraction, and I personally didn't see any startup that have this, that had problems, and I'm not aware of what big problem itself. So if someone wants to educate me and have a really interesting startup, then I'd be, I'm a curious guy. That's what I'm doing. So, but that's kind of where I'm coming at it right now.
All right, Andrew is really interested in hearing your thoughts on the role of the government in the AI space. So not from the ethics or legal perspective, but whether they see the government, or whether you see the government having a role in supporting the development and the growth of the local industry. Do you have any take on this? Hot take, Dror?
Maybe Sally, you want to go first?
Sure. I mean, I do have a take on this. I talked about it earlier when you were asking about Australia's, role in the AI innovation. I said we're really good at the application layer, but just everything below that, that's where it usually needs a lot more. It's very capital intensive. So, for example, I'm not saying we need a foundation model, but if the government wants us, for example, to have more data sovereignty or have more model sovereignty, and wants, people to build in that space, that's where you need hundreds of millions or billions of dollars in capital, and it's very long-term, very patient capital. That's where the government should play a role. Also in like things like quantum, etc. I think that's where they should play a big role. And then also just in terms of encouraging entrepreneurship, like LaunchVic is doing fantastic things I can see, but on a more countrywide scale, or in the New South Wales scale or Queensland scale, I think there's much more that can be done in terms of grants to get, really smart PhD researchers in AI or ML started. How do you commercialize this product? How do you help them, move away from the university to start a company? I think there could be a lot more that is done there. And also another space I think would be really interesting to get more government push and support is like governments themselves, being vendors or users of AI products, and also encouraging the big enterprise, like, the big four banks or the telecom companies to be really, taking up AI technology. And I think that really, really help.
Thank you.
Yeah.
Sorry. Yeah.
Yeah, so I kind of agree with that. Stimulating the demand side is smart. What do you do with the supply side? I think in the supply side, go early. So here's what I don't like. The government is investing $1 billion into building some quantum research something. Those things almost never really work out. Like if you really research them, governments, and also like if you go and say, oh, we need sovereign AI, we need to have a model onshore. Okay, sure, but you need energy onshore as well, right? So, but energy is a well understood industry. Yeah, sure, we'll have a power plant. AI is so fast moving. What are you going to do? You're going to build a model of like yesterday's, and you're going to try to compete with some other vendors. I don't know. So I'm agree that you should have a government insight and like say what's the priorities of the people of Australia in terms of sovereign AI, sovereign data, and so forth. I'm very I have a feeling it will end up with like paying Microsoft to run, have a data center here. So I don't think it's going to do much to the innovation economy. It's going to do a lot to the, some well-connected, big vendors. That's that on the everything to do with the empowering the early stage and the mid stage of companies here in Australia. I think Australia is doing a good job. I really like the idea of getting Australian government to adopt technologies and put an emphasis on that. And then that's going to stimulate the demand side. So those are some of my thoughts on the topic.
Yeah, we see a lot of like UAE, the government have, or the police department have the all AI sort of like virtual department, which is very cool. We do have a few more questions, but I would like to refrain from putting you guys on the spot doing due diligence on sort of like, would you invest in this startup? After this call, feel free to reach out to Sally and Dror if you would like to chat more about your company. For this call, I would like to keep it general so everyone can share on just general thoughts. Can I ask a spicy question about valuation? Yeah. We do have a few angel, and obviously this is a selfish question, but when it comes to early stage and you insert some really cool ex-founders or machine learning expert, the valuation suddenly becomes over the roof. I've seen pre-seed with 40 million US valuation, and there's no benchmark, right? There's over the place. You've got a spectrum of valuation. How do you deal with that from your end? Yeah, because you're seeing
there's horses for courses here. The fact there's no benchmark is good, because when there is a benchmark, there's no opportunity. Why? Because if everyone knows that 1 million ARR is going to give you a $7-8 million valuation, so then there's de-risked. You can get that money from anyone here. So as investor, I don't have a competitive advantage. My only competitive advantage is to hire 50 scouts and go and try to find all the companies that have getting to 1 million ARR, because there's a benchmark. So I'm not pro benchmarks. I rather there's ambiguity and uncertainty and risk and confusion. I don't think angel investors themselves are. I am an angel investor, and I did invest angel, and now I'm in a VC because I went through realizing that my ability to pick that one next Canva is going to zero. Whereas if I'm thinking about it as a portfolio optimization challenge and I apply thesis and process, then I've got a better chance of beating the benchmark. So now to your question, if you come to me with a pre-seed, pre-product company with $40 million valuation, I absolutely want to meet the team and I want to understand what they're talking about. How about that? Because that sounds to me like money. or a great way to lose money. So I'm in the conversation, and I would like to have to learn what am I missing.
Right. Sally, do you have anything to add?
That's fair. I think if you're talking from an angel investor point of view, that's really personal. Like, what are you trying to achieve here? Like, is it a learning exercise for you? Are you trying to make financial returns? Like, what is sensible to you? From a fund perspective, it's with valuations, we're much more sensitive, right? Because we're investing other people's money, it's LP's money, and we've promised them certain things. Like, for example, different funds have ideal return targets on the fund or on each investment. Some people might say, we want a 3 to 5x potential return on this each investment. Someone might say, I need a 10x plus return on each investment. That's when you can have benchmarks, and that's necessary at the fund level. But at angel level, it's really dependent on you and what you want to learn or get out of this. And definitely agree with the approach. Like, if anyone's doing angel investing for the first time, it's probably better to do a bunch of smaller bets rather than like putting your eggs all in one basket, because it's extremely high risk at the angel stage.
Yes, agree. My take on that is, well, I'm a big believer of history always repeat, and if the valuation is crazy, I'm feeling we somewhat like back in 2021 where valuation just, back, right, left, right, center, and it's hard to raise the next round with higher valuation. So yeah,
but we are nowhere near to 2021 in my experience, my observation. No way near. So we were at the end of a 10-year cycle over there with zero interest rate policy, and we are here in a platform shift with infrastructure build up and massive potential. I think we are in a complete different. I don't think history repeats itself right now.
Maybe not yet.
No, it is rhymes, but I don't think we're in a. And as I said, like the nonsense valuation of 2001 and 2002, I think they're like, I don't see a lot. Sally, do you see a lot of? I mean, yeah, sure. If you're talking to a few, San Francisco scene, sure, there's a few funny stories there, but it's not contagion in the entire market. Sally, would you agree?
It's less obvious here in Australia. San Francisco, I have to say there are more alarming signs. Like, there is too much capital, I think, in US VCs going after like a lot of opportunities. So I'm not super worried, but there are signs of, you need to take caution in terms of valuations are very, very high in SF right now. That's only specific to one SF AI companies, caveat.
Yeah. All right, we have time for 2 more questions. Let me just try it quickly. David asks, what are your thoughts about AI writing production software? So not code or autocomplete with QSAR, not lovable replete prototype, but actual real commercial quality full software systems. Do you have anything on this, Sally?
Yeah, I do. I'm on a board of a company that's in that space, and I spend a lot of time on it. So I've got a somewhat nuanced opinion on that. I think it's not there yet. I think the best way to think about Replit and Lovable is that they are prototyping technologies, and they require engineers. They require engineers who know what they're talking about to move from the first MVP prototype to the actual product. And that's not a bad thing. It's still a massive boost. But where this agent builder, agent code generator kind of, vibe coders, whatever, but it is agent and there's autocomplete. So I'm not talking about Cursor here. I'm talking about Lovable, Replit, etc. There's many now. Firebase Studio, I was just playing with it just now. Once you get your first version and you're trying to actually start evolving it and change it, and if you already launched it, if you got data, good luck maintaining it. It's very complicated. It's like you need to have expertise in software engineering and then expertise in the architecture that they end up building. So I don't think it's there yet. I think it may get there one day. We're making a bet on no-code architectures. So you've got like a more structured way to build an app that's like a no-code engine. And then the AI doesn't just write code, it writes to the spec of the no-code engine. And that's much more restricting the amount of complexity that the AI can put. Every new release, I'm using Cursor, every new release of the underlying model, Cursor now writes code for me in a different style. That's actually not yet sustainable. So I think there's a significant hype around Lovables and Replits like vibe coders, and I think it's a promising side. But we're not there yet in terms of it writing production code and maintaining production code. But I think that's where the money is going towards. So that's the solution worth trying to solve.
Amazing.
It's a problem trying to solve.
Yeah. All right. So we are time. I would like to just close by the last question with Ringo, who asked your advice. If you're just finishing your degree in early 20s, what do you think they should do? Should they start a startup, work in the startup, or trying to join a program incubator? Do you have any advice for them?
Yeah, that's a good question. I mean, I'm biased. I love working in venture capital and I love startups. So I always encourage a lot of people to work at startups, but obviously there's different stages. Like if you're working at an earlier stage startup, you probably need a more generalist skill set and you're doing all sorts of different things. And I'm not sure, potentially it might not be the best place for a new graduate if you're really trying to have really strong mentors teach you a lot, but also it's like baptism by fire and you can learn a lot. So I'd say, maybe working at it's dependent on you, but if you work at a larger startup, there's a bit more process. You might have a manager who can really hold your hand, but you still get to see what a startup or technology is like. So definitely think working at a startup is a great idea, and just really then you can figure out, what's your skill set and what do you really care about before launching a company. But at the same time, some of our best investments have been people who just straight out of uni started a company. So the world is your oyster. Do whatever makes you happy.
So my 2 cents here is that in the same way that we're not allowed to give personalized financial advice over webinars, I don't like to give personalized career advice without knowing your circumstance. I can speak about my experience, which is that I finished uni and went and started my own company, and I'm happy that I did that, and it suits me, and I met a lot of people who loves to be employees of companies, not big companies, small companies, and so forth. Startup is not easy. It's not fun. It's rewarding. It could also be not rewarding. So, but I think it's overall worth it. And do we have we think that, when you're younger, you can take, so here's a general advice. When you're younger and you don't have a family, then and you don't have a mortgage, you can take more risks. When you're older, you can take slightly less risk. So you should factor that. And truly, it's really about, it's kind of cliche, but it's really, where's your passion? If your passion is make a dent in the universe, go make a dent in the universe. Go for it. You may fail, but it's worth trying. It's worth, the biggest thing we have when we age is regret. So, do you want to have regret all your life, or do you want to give it a shot?
I love that so much. Yes, Constantine say, take risks when you can afford to. Go make a dent on the world. Thank you so much for your time. Thank you everyone for joining in. We are at time. The recording will be shared after today. If you want to reach out to Sally and Dror, they're very active on LinkedIn. Tune in to Dror's podcast. I've listened to quite a few episodes. I love them. So yeah, thank you for having us. Thank you.
Thank you.
Thank you.
Good day. Bye.